Hi, Anthony here. I hope you're having a great day wherever you are in the world. The global economy is shifting gears big time. We are looking at a massive financial event on the horizon, something we're calling the yen vortex. This isn't just about currency, it's about a potential global liquidity shock triggered by the Bank of Japan. We are talking about a shift involving $4 trillion that could reshape markets as we close out the year. The date you need to mark on your calendar is December 19th. This is the catalyst. Why? Because there is an estimated $4 trillion tied up in the yen carry trade, a massive global investment strategy funded by cheap Japanese money. History tells us we need to pay attention. If you look at the market analysis, Bitcoin has dropped by roughly 20 to 30% following the last few Bank of Japan rate hikes in March and July of 2024. December 19th is when the BOJ is widely expected to raise rates again, potentially starting a massive unwind. To understand the risk, you have to understand the mechanism. Let's look at what investors call the free money glitch. For decades, Japan kept interest rates at near zero or even negative levels. This allowed institutional investors to borrow massive amounts of yen for almost free. As you can see in this diagram, they take that borrowed yen, convert it to US dollars, and then use those dollars to buy high-yield assets like US Treasuries or tech stocks. It's essentially a machine that has pumped trillions of dollars of liquidity into global markets for years. But here is the problem. The glitch is ending. When the Bank of Japan hikes rates, two things happen immediately. First, the cost of borrowing goes up. Second, and more importantly, the yen gets stronger against the dollar. This triggers a margin call. Investors holding these massive loans suddenly find their debt getting more expensive. To cover that debt, they don't sell what they want to sell. They sell what they can sell. And because crypto markets operate 24/7, Bitcoin is often the first asset on the chopping block. This sucks capital out of risk assets and sends it back to Japan. It gets more complicated because this isn't just one threat, it's two. On one side, you have the hedge funds unwinding their trades, as we just discussed. But on the other side, you have the Japanese government itself. Japan is the largest foreign holder of US debt, holding over $1.1 trillion in treasuries. If they sell treasuries to bring capital home, we see a flood of supply, which causes bond prices to fall and yields to spike. And when safe yields spike, risky assets like crypto and tech stocks become much less attractive. This brings us to the cascade. If you follow the dominoes in this graphic, you see how a BOJ hike leads to a stronger yen, which spikes treasury yields. This surge in yields could be the pin that pops the AI stock bubble. Remember, AI stocks like Nvidia and Microsoft now make up 23% of the global market cap. If interconnected companies like these take a hit, the contagion won't be contained. It will ripple straight through to the crypto market as investors rush to de-risk. However, it's not all doom and gloom. If you look at this comparison, we are currently witnessing a global tug of war for liquidity. On the left, you have the force of tightening from Japan, draining liquidity via the carry trade unwind. But on the right, you have the force of easing from the US. The Fed has effectively restarted the money printer under the guise of balance sheet stabilization, injecting about $40 billion a month back into the system. The market's reaction depends entirely on which force wins this battle. That leads to the bull case. Is this crash already priced in? Unlike previous shocks, this move is highly anticipated. If you look at the gauge here, prediction markets are pricing in a 98% probability of a hike. Economists are unanimous. This sets up two scenarios. Scenario A is the bear case where the mechanical selling is just too heavy to stop. But scenario B is the sell the rumor, buy the news event, where the reaction is muted because traders have already hedged their bets. If we do get a dip, where does Bitcoin land? If you look at the chart here, we have identified key levels of support. The first line of defense is around $85,000 to $70,000. This is where ETF buyers and short-term holders have their cost basis. If that wall breaks, we enter the danger zone down to $60,000. That $60,000 level is critical because Bitcoin has historically never dropped below its electrical production cost. A wick down to that level would likely be a massive buying opportunity. So what should you do? Here is a simple 3-step game plan. First, ditch high leverage. Expect extreme volatility. We could see a 10% drop followed by a 15% rip in the same day. Second, watch the early warning signal, which is the USD JPY currency pair. If you see that pair drop rapidly below 148 or 145, the unwind is happening. Finally, keep cash on the sidelines. A 20% flush isn't a failure of crypto. It's a liquidity event that you want to be ready to buy into. It is vital that we don't lose sight of the bigger picture. Despite this short-term hurdle, the bullish factors remain intact. The Bitcoin halving supply shock is cumulative. ETFs have unlocked persistent capital. And crucially, the Fed is in a rate-cutting cycle. Think of the BOJ hike as a speed bump that could wreck your suspension if you hit it too fast, but it doesn't change the fact that the road is heading up. In closing, volatility is just opportunity in disguise. We expect sharp moves around December 18th and 19th as the algorithms react to the headlines. But remember, any dip caused by Japan may be short-lived as US liquidity flows back in. The question remains, is the yen carry trade a black swan, or is it the ultimate bear trap before the next parabolic run? Stay liquid, stay alert, and prepare for the 19th. Now, before we wrap up, if you've gained any value from the presentation, a thumbs up would be greatly appreciated. Help me support the channel. Subscribe and hit the bell to be notified as I'll be uploading regular videos like this. With that, hope you have a fantastic day, and I'll see you in the next one.